you could break it down by year. I was wondering if the numbers look different for 2018, considering that, that was kind of a rougher year comparatively, right? I'm just wondering if the holding periods look different, given that, it's been mostly bear market this year. Does that make sense?
Yeah. I mean, the short answer, I mean, we can slice the data a lot of different ways. What you're talking about is what I would call seasonal analysis, and the short answer is yes, we can do that.
Okay. I mean, I'll still follow the signals. I think I understand them, so I guess it really wouldn't matter. I was just kind of curious, is all.
Yeah, I think the other thing I would say is I use tick both ways. I mean, I short the market. I think what we've discussed, and Paul and I have discussed, and we've ran the numbers before too, is the short signals are a lot shorter than what people think, and it's hard to quantify and get in those. Now, if you're using some other type of trading plan or trading method, I'm just throwing out something like if you said, well, below the 200 MA, I'm going to stay short. Again, we're not condoning that, but I'm just saying from what he ran on the bear signals it's harder to stay short. And I think Paul would agree with this. I think we've talked about that. So, but you can use the tick the same way. I use it that way and VWAP also. If we're under the ribbons and under the moving averages and we're going down, I mean, you can short. I mean, you can use the counter signal as an out, basically, once it starts getting back above the ribbons. Now, these are shorter term moves, and obviously you're not looking to put your whole portfolio in that. But I think the main takeaway that Paul said, though, is just getting on the right side of the trade is 60 to 70% of the battle. And if you're on the right side of the trade, then that's going to take care of your risk management and not trying to go counter trend. Like we've said, everybody wants to buy the bottom right now, right? Well, where is the bottom? Well, we have stats and edges now to tell us when there's a possibility that there might be a reason to go long. So I think that's kind of what you're asking in a bear market, right? I mean,
yeah, no, absolutely. I think it's great. It's great information and analysis.
I think one of the things I'd like everyone to, if you're looking at my screen right now, one of the graphs I've got here that I've built, I haven't gotten them obviously published out to you guys yet. Is there an edge? So a coin toss is 50%, right? So that's right across here, right? And so basically this is saying the win rate, just with taking the signal and closing it one day later, you're, large number of trades, well over 1,000 in the baseline here. You're looking at just with a couple days, if the trade starts working in your favor, you're over 60%. So now you've just taken a coin toss trade. And, one of I think the things that we all want to do is where's the edge, right? And you guys have been on the receiving end of when I beat you up with that, where's your edge for doing XYZ? Well, part of the edge is right here. Right? So if we know we have setups with the CT, and you can see here on the screen, now we're above 60 and we're starting to push 70 when this thing gets out to 90 or out to 9 days or 10 days in duration. 70% of the trades that were taken with after 10 days, nearly 70% are winners. That's winning 7-3 and losing. That's winning 7 and losing 3. I'll take those. I'll take those odds. So what I want you, and this is just the ribbon inversion, right? This is just purely that long-term 40-day average, the majority of those trades being in there. If we can couple this with other stuff and start pushing this northward of 70 to 75%, you're talking some sizable money you can put on stuff, still be wrong, and make it up on your other trades. So I think there's a lot for us to consider here. We haven't talked about position sizing, but this chart that I'm showing you with these stacked bars right here, or this bar graph, this will actually go into your position sizing calculations. And Albie did a presentation on this, and basically it was if you're winning 60% of something, you can be right X number of times and be wrong X number of times. And you can see that it's not a static number, right? It's actually, it varies and it grows better as time goes on because the trade works in your favor. You got into the stocks that actually start moving up. And this is just the SPY, by the way, right? There's no alpha necessarily with the SPY by definition, or beta. So you can see where this is headed, right? So I think this is kind of, I started with the CT and all this analysis with this because there's been a lot of questions, first of all. And two, if we get this part right, we're already tilting the table, a little bit in our favor. And then we throw gamma and delta and some of the other TA stuff in there. You can see we should be able to get 70, maybe even 75% win rates on these strategies as we go forward. And I can combine this within EdgeRater. I just haven't done it yet because all this stuff takes an amazing amount of time. But just want everyone to kind of see where my head's going with this. And, so that's the ribbon inversion. There's 60, again, pushing 65. This is just crossing the ribbon, either, as I said, from below the lowest MA or the upper MA. And then there's other ones that are here too. Let's just go look at the breakouts, for instance. Breakouts, not as good, like I said, right? Just taking those white breakout trades, still an edge, but not necessarily what I would consider a definitive or a decisive edge until you couple it with the long-term moving average, that ribbon inversion, and all of a sudden now you're starting to push upwards again of 70 because it begins to dominate the entire conversation here. So anyways.
Hey, Paul, could I show real quick, like if we go back to TradeStation and pull up that tick where we got that below ribbon cross, I think we're a couple days back.
Yep.
You need to be on the 25th.
Yep, I'm getting there. I've got 10 years open here, so you click one thing and it takes you back 2 months. So I think this is it right here, right? 25th.
Yeah, let me share my screen. Let me show the crew real quick, like how I would immediately assess what name to be in.
Yeah, go for it.
This should answer. I think Miss here asked it in voice chat. So this is essentially just the spreadsheet, and you don't have to be doing a bunch of complex stuff to make this work. You could easily take a midday chunk of that spreadsheet and be able to figure this out with just understanding some of the basic columns at the top. And I won't make this a spreadsheet demo, but I want to be able to quickly analyze the spreadsheet. So I have everything built on pivot tables. So the first thing I want to look at is I want to see what sectors and EFTs are positive gamma. I went back in here and changed the filters to what I would be looking at as we went into the 25th there and when I'd uploaded the 25th. So this kind of simulates what would I be seeing on the 25th historically for what was positive gamma on that day. We were below the ribbon. That's traditionally a bearish area. But I do know that energy is strong. I know that sector's got positive gamma. XLE's in a positive gamma, both in the current OE and the next OE. That generally makes me pretty bullish there. I can look over here and see that we got OIH, Van Eckers in positive gamma. We've got XOP in positive gamma. So the next thing I would do is go to my go-to gamma move, which would be, since we got that cross up, I'm looking for names to be long on. I would look for names specifically based on some very simple criteria, and there's nothing fancy here. These are fields within the pivot table already. The total OI over 100K, current gamma positive state, next gamma positive state. I do have one formula in here, which is what I call the P-trans zone. And I'm just looking for stops that are around the positive trans because the gamma edge I'm looking to play is from positive trans to plus gex. And then I just rank these. So there's two things I'm looking at. One, where is it at in relation to positive trans? How big is the move to plus gex? And then am I in a positive gex to minus gex ratio, which is another proven edge? And the first name that shows here is COP, ConocoPhillips, strong oil name. Its positive trans is 108. Spot price closed the prior day at 109. It's got a 10% P trans to plus gex move that interests me. And so I would look to play a name like that. I'm only looking at maybe $2, $1.50 risk here. And I'm looking at a potential 11%, which is, pretty close to $12 move. Great risk reward. So the question is, how did that name, if we took that trade in the 25th, how did it perform? So here's the historical closes by date. So that name closed at 11/11/25 on 5/25, cross completed, and then we were off to the races. Not a huge multi-day move, but certainly respectable. You could play a $5 move on the underlying in an option for a nice profit. And most of these moved the way you'd want them to. So we go back to that screener, the first 3 or 4, SU, HAL, CBX, we can look at these. So SU moved 4%. Halliburton, better move, 7%. And I'm only looking from 5/25 to 6/1. And the reason why I'm cutting it off on 6/1 is that's where I would have exited the short-term trade because we hooked over on that moving average, or the CT, or cumulative tick long, came back over the white ribbon. But that's, I'm sure people have questions here, but that's a quick way just to identify what are high quality, not high quality, high probability trades, just using the gamma spreadsheet. And although I've got some stuff built already and I've got the history here, if you were using that spreadsheet and just downloaded it, you're probably talking about 4, maybe 5 filters on that data to come up with those same names.
Awesome.
If I say any questions, there's probably a million, but happy to try to, I don't want to dominate the discussion here with spreadsheet, but that's what I consider gamma edge stacking. I'm taking edge rater proven probabilities and stacking them together on top of a moving tick signal.
That's great, JV.
I'd like to even go back and look at what it would have done too, just because I happen to have the spreadsheet stacked up in the data table. So I know the closing price.
Hey JB, thanks for explaining that. I was the one, I know I asked that question, so thank you.
No problem. And I'm happy sometime to make that much simpler and just show someone how to download the spreadsheet, use filters at the top to come up with those steps.
Yeah, I think the gamma scanner gives us a flavor of that, but it doesn't have the diversity or the breadth of what you just showed. So I think or not the gamma scanner, but the gamma scans, right? The channel that allows you to run those canned scans. I think we need to continue to build that out to kind of demonstrate what you just did.
I think a sector scan that says, show me positive gamma sectors would be nice. Just using the spiders names, like the 11. That would be good.
Yep. Yeah, and we actually can do that fairly easy. We can certainly do that.
I would say my entire trading is really just centered around. Now I'm just looking for upside, downside names on edges that I could stack. I don't have as many to the downside because we just don't have as many. I would say quantified edges developed yet. Is that fair, Paul?
Yeah, I mean, all of this, as you guys can see, takes a lot of time and diligence to make sure that, it's not garbage in, garbage out type thing. So yeah, it takes time, and, we just need to keep building out these different scans and these different edges. Yeah.
I think when I'm looking to play the downside, I'm looking for a stock that's currently in positive gamma and next OE's in negative. So that negative wing flip condition. And then I'm just kind of TAing it, looking to see if it'll lose key levels.
Right.
And the TA is really just about establishing risk point.
Yep.
I think we have like if a negative wing flip is present in spots above plus Gex, I think that's been I don't remember. I don't want to tell anyone things I actually don't know. I'll trade things I actually don't know all the time.
Start calling you Mark Minervini.
What'd you say?
Exactly.
Breaking up.
Yeah, exactly. All right, so for the people who are listening in, where would you like us to focus as we direct our